Welcome to the complete guide to price patterns. These aren't just lines on a chart, they show what traders are really thinking. Fear, greed, hesitation, it's all there. In this video, you'll learn the patterns that signal when a trend is likely to keep going, or reverse. Let's break it down. Let's start with continuation patterns. These show that a trend isn't over, it's just taking a breather. Think of it like hitting pause on a song, before it picks right back up. The price consolidates, traders catch their breath, and then, boom, the move resumes in the same direction. Now let's look at a few of the most common, and powerful, continuation patterns you'll see on the charts. The bull flag is a classic continuation pattern. It forms after a strong move up, followed by a slight pullback moving down or sideways in a tight channel. This shows buyers are taking a breather, not losing control. When price breaks above the flag, another strong upward move usually follows. To set a target, measure the initial move, the flagpole, then project that distance from the breakout point. Notice how the flagpole and target are marked clearly in this example. The bear flag shows up during a downtrend when price pulls back with a weak upward move. This pullback creates a small channel sloping up, but the momentum is lacking. It often traps buyers expecting a reversal, while patient sellers wait for the next leg down. When price breaks below the flag, the downtrend usually resumes sharply. Look at how the bear flag here acted as a setup for continuation. Pennants are small, tight triangles that appear after a big price move. They show the price taking a quick pause, moving within a narrow range. This quiet buildup usually leads to a fast, strong breakout when the price finally moves out. Notice how the price squeezes in tightly before it bursts out. Wedges are patterns that can tell you a lot about what's coming next. A rising wedge often shows up during an uptrend but hints that the upward move is losing strength. The price range gets narrower, and a breakdown might be coming. On the flip side, a falling wedge slopes downward but signals that strength is building. These usually break upward, surprising those expecting the downtrend to continue. Take a close look at how rising and falling wedges differ. The ascending triangle forms when price keeps hitting the same resistance level, but the lows keep rising. This shows buyers are getting more aggressive, slowly squeezing the price higher. The flat top acts like a ceiling under pressure, and when it finally breaks, the move often continues upward. See how this ascending triangle builds pressure before the breakout. The descending triangle forms when price keeps hitting the same support level, but the highs get lower each time. This shows sellers are getting stronger, while buyers are slowly backing off. When that support finally gives way, the move down often picks up speed. Watch how this descending triangle led to a clean breakdown. The symmetrical triangle shows up when price makes lower highs and higher lows, squeezing into a tight range. This pattern reflects indecision as buyers and sellers balance out. It often signals that a big move is coming, but the direction isn't clear yet. Traders wait for the price to break out and confirm before taking action. See how the triangle acts like a pause before the next strong move. The best time to enter is right after the price breaks out of the pattern. You want to see a strong close outside, not just a quick spike or wick. Volume and candle strength help confirm the breakout. Some traders enter early, but safer ones wait for confirmation. Look at how entry, stop, and target levels are clearly shown here. Reversal patterns appear when a trend starts to lose strength. Price stops making higher highs in an uptrend or lower lows in a downtrend. The market structure changes and momentum fades. These patterns give early clues that the trend may change direction. Here are the most important reversal patterns to watch for. A double top shows buyers couldn't break past resistance twice. The peaks are similar in height, forming an M shape. Once price breaks the neckline, it confirms the reversal. Sellers gain control and push the trend down. Look at how this double top pattern broke down cleanly. The double bottom shows up after a downtrend hits solid support. Price bounces, comes back to test that same level again, then pushes higher. It forms that familiar W shape. basically a sign that buyers are stepping in. Once the neckline breaks, that's the signal the trend is starting to reverse. Look how the second bottom kicks off the move upward. It's a clear shift in momentum. The head and shoulders has 3 peaks, the middle one is the highest. It usually forms after an uptrend and shows that buyers are running out of steam. The key level here is the neckline. Once price breaks below it, momentum shifts to the sellers. It's a clear and classic sign of a trend reversal. Look how this perfect head and shoulders layout signals the move downward once the neckline gives way. Inverse head and shoulders flips the classic head and shoulders upside down. It shows up after a downtrend, with 3 dips, the middle one being the lowest. Once price breaks above the neckline, it's a strong sign that momentum is shifting. Buyers are starting to take control, and that often sparks a new uptrend. Notice how this simple formation hints at a major shift before the rally begins. The cup and handle is a clean bullish setup. It begins with a rounded bottom, the cup, followed by a small pullback that forms the handle. This pattern reflects steady accumulation, then a surge in buying interest. The breakout usually starts a strong move up. The typical price target is about the same distance as the cup's depth, measured from the breakout point. You can see how the structure builds momentum before price launches higher. Patterns work better when supported by other signals. Look for key levels like support, resistance, or trend lines that line up with the setup. This overlap is called confluence. It increases the chance of a successful move. When multiple signals come together, the setup becomes much stronger. Look at the image to see how these elements align to create a powerful signal. Sometimes, a pattern fails, and that failure can become a setup on its own. For example, a breakdown that quickly reverses can trap traders on the wrong side. Smart traders watch for these fake moves as contrarian signals. What looks like a failed setup can actually lead to strong, fast moves in the opposite direction. Notice how a failed pattern can flip the script and create a high-pressure move. Patterns aren't just shapes. They bring structure to your trades. They help you plan your entry, stop, and target with logic, not emotion. Instead of guessing, you're reacting to what price is showing. This builds consistency and removes the noise from decision-making. It's how you turn analysis into a real trading plan. Let's quickly recap what we've covered. We explored continuation patterns like flags, pennants, and triangles, tools that signal trend momentum. Then, we moved into powerful reversal setups such as double tops, head and shoulders, and more. These patterns help you trade with structure, clarity, and confidence, not emotion or guesswork. Now it's your turn. Apply what you've learned, stay patient, and let the market guide your next move. Congratulations! You've officially leveled up in your trading journey. You now read price patterns with greater clarity and act with intention, not random guesswork. Each setup you identify is backed by solid, reliable signals, not just emotions or gut feelings. Your confidence continues to grow as your strategy evolves and becomes sharper through real experience. Keep practicing with patience and discipline, and let the market continue to guide your progress forward. Next up, we'll deep dive into the true rhythm behind every price move, market phases and price cycles. You've learned the patterns, now it's time to understand when and why they actually work, or fail. Most traders get trapped not because of bad setups, but because they trade in the wrong phase. What you're about to learn will rewire how you see every chart, forever. This is where trading starts to feel like a superpower.